India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's the beginning of a new week, and this is, in some ways, the biggest week of November, and of course, in some ways, the biggest week this quarter as well. Lots of big, huge events lined up, which have market implications. We will discuss all of them as we go along. I'm Prashant. With me, my colleague Surabhi and Nigel. Guys, hi, good morning.
Hi, good morning, folks. I guess the big Diwali week is finally behind us, so I think most of us are coming back post the festivities, and I think the market wants to also take fresh guard because of the kind of cues that we have lined up with the election in the US, the FOMC meeting, and this final big meeting in China that everyone's talking about. So there's just so much going on, isn't there?
Well, as Prashant has been saying, it's going to be a November to remember. It's going to be a big one coming up for the globe, for equity markets as well. So let's get straight to the action.
Absolutely. Before we get to the action, by the way, someone was telling me that you should weigh yourself post after Diwali season and before Diwali season.
No,
I forgot to do
no.
before, but I did after. And I think I've gained a few kilos.
Those are numbers we do not look at, so we avoid them.
Absolutely. Well, let's just quickly begin with, of course, the dateline. I think that is essentially something we've got to you. It's not new, but just to, in a way, put it out again, US elections are tomorrow, which is the 5th of November. You've got the China NPC, National People's Congress, which starts today, runs till the 8th, which overlaps the election result in the US. And then on the 7th of November, which is Thursday, you get the Fed decision. So this is essentially, the week which is in front of us. Now, let's just turn the clock back and take you to Friday when you got the jobs report. Absolutely remarkable. So you basically had US jobs numbers, which were much lower than expected, but the markets were unfazed. Now, the actual number, 12,000 jobs added in the month of October, as compared to about 100,000, which was expected. The impact, of course, coming through from strikes and hurricanes. Now, the thing is, on Friday evening, that was the Muhurat session when the numbers came, I was saying that markets should remain unfazed, absolutely. That we should not see too much of a reaction because it's strikes and hurricanes, and this was kind of well advertised. But the actual reaction was even more extreme. You had equities which reversed the slight temporary sell-off that we saw. S&P was up 0.4 by close. NASDAQ was up 0.8%. And this is the rates market. If you look at US Treasuries, they corrected the knee-jerk rally that they saw. Yields had fallen sharply, and by close, the 10-year was up 10 basis points. You got a very weak jobs report, which essentially means the normal reaction function would be that the Fed's behind the curve, they need to cut more, yields should fall sharply. Yields ended 10 basis points higher. Now, that is something you don't see very often. By the way, the 10-year real yield has ended about 2%. Historically, if you go back last 4-5 years, 2% is kind of the danger mark, but I think we're in a slightly more different environment, so I won't sort of fixate on that just yet. The dollar index ended about 0.3%, 104.28 is where we left off on the dollar index. Consensus still expects, after the jobs data and everything, still expects a 25 basis point rate cut on Thursday. That is the 7th of November. The US election, and we'll get the results. Hopefully, we'll get the results when they're supposed to come, which is tomorrow night. For us, it will be Wednesday early morning. So Wednesday morning around the same time, I think we should be able to by this time, about half an hour from here, from about 8:30 in the morning, 9 o'clock in the morning, we should know who is the next US president. If, of course, things are not murky as they were in 2020 and 2016, and it's not very, very close. But it remains a binary risk for markets. Betting market averages, which were favoring Trump, have also kind of converged to what polls are showing, and the polls are showing that both Trump and Harris are in a kind of a dead heat. Okay, there's just one more thing I want to point out. Last week, there was, and I think it was kind of missed, or not too much attention paid to it. There was a Reuters article which said that the much-awaited fiscal stimulus plan will be announced during the NPC. That is not the sort of story. They put out a number. The article floated a package worth about $1.4 trillion with promise of more if Trump wins the election. And I think this is the one which we need to watch out for as well. And this will all play out in the next couple of days or so. Just to circle back and closing the levels here, resistance for the Nifty. We ended higher in the Muhurat session, but of course it's a 1 hour low volume day. Resistance at 24,372, which is the Thursday high, and then 24,498. These are the two levels to watch on the upside. Supports come in at 24,073. You got for the Nifty Bank, which did not break the low of 50,194. It posted a positive weekly close. Resistance at 52,330 and then 52,835. And support zone is between 53.82 and 50,194. I think if you're trading day to day, and especially the indices, I think it's just better to wait a day, 2 days, and then take a call. By Wednesday morning, I think the picture will be much clearer. And I'm sure you'll get an opportunity to do what you want to do because expect at least the indices, broader global indices, the big ones, to be volatile going into the US election. Surbhi.
Absolutely. What a big week lined up, right? So you need to pad up, get the coffee or tea or whatever's your fix, get that ready to get through it. Before I start talking about Asian equities and how they're doing, just a word on oil as well, because what we were discussing last week has actually transpired. OPEC Plus was to increase its output in December. They were talking about an output increase of about 180,000 barrels. But now that's been pushed back by a month, and that's why there's a bit of a bidding on the upside on oil prices as well. So once again, Brent is moving closer to the 75 zone. So just keep that in mind. Now back to equities in Asia. Actually, to start off with, the color is green, considering the huge week that we have ahead of us. Most of the markets are up and about. Japan, by the way, is closed today. So just keep that in mind. That's why, that's a cue that's not available. But a lot of the other markets that are trading are actually fairly positive. We also have the rate decision from Australia this week. Tomorrow they're coming out with the rate decision. No changes expected in Australia. Now on China, considering that's the big event here in our neighborhood in Asia, the 5-day NPC meeting, which is the National People's Congress of China, which is their parliament, that meeting will get over on Friday. It's a 5-day event that's going on. And all kinds of bets are doing the rounds in terms of the size and the extent of the stimulus. Nomura, for one, feels that the extent of the stimulus could be up to 20% higher if Trump gets to the White House instead of Harris. So a lot is perhaps hinging on the way tariffs will play out. In fact, under Trump, going by a lot of the announcements that we've heard and the claims we've heard that tariffs could go up, that's, imports coming into the US from China, tariffs could be up anywhere between 60% to 200%. So therefore, they're expecting a bigger stimulus in China if Trump does get the White House. By the way, in the last 1 month, there's been a lot of underperformance in the Chinese market. The mainland Chinese index, the Shanghai Composite, is down 6%. Hang Seng is down almost 10%. But, and now this brings me to India, this has not led to a stoppage of the FPI exodus that we've seen in the same period. In fact, if you forget the Muhurat session for a second and just, I'm rewinding back to the Thursday session before getting into the Diwali weekend, we had a lot of selling that day as well. I mean, FI has sold once again in the cash market, almost 5,800 crores. Domestic institutions offset about less than, half of it. And on the Muhurat session, for what it's worth, I mean, the session closed positive, but the FPI selling continued even there. Small number, 200 crores was the selling on the Muhurat day. So keep that in mind because the FPI numbers are nowhere supportive. The level that Prashant also mentioned, even I'm watching for that quite carefully. This is 20,073 because that's the low. If you talk about the consolidation that the market has been, we've not breached this level, and this is going to be extremely crucial to watch this week as well. Now, just a couple of areas that are going to be in focus. OMCs, not only because of the move in oil, but because we've got a hike on both ATF and commercial LPG. So let's see how our stocks react. It's about a 3.5% increase in ATF prices. I went by the Delhi rates that have been announced. If you look at the other pocket of the market that I'll watch out for today, that's going to be autos for sure. What is the month of October telling us? That the struggle on the passenger vehicle side continues. That's real. Numbers have been weak. Hyundai, just 2% growth. Maruti, domestic sales down 2.3%. Tata Motors, passenger vehicles, absolutely flat. The only exception is Mahindra & Mahindra with that 20% gain. On the two-wheeler side, things are much better. Eicher, for instance, Royal Enfield sales are up 30%, TVS sales are up 14-15%. Hero's done well, 18% higher. We'll be speaking to the management of Bajaj Auto as well. So again, the complete disconnect between two-wheelers and four-wheelers, that's very much on. Then, of course, we'll talk about tractors. M&M has done really well on tractors as well, by the way. So watch out for that stock today. Lots of interesting results. I'll leave you with the list for the day. ABB, Amara Raja, Bata, some of the railway names like IRCTC, and IRFC as well, Raymond Exide. So it's a pretty interesting session for a lot of these large mid-caps that are reporting numbers today, Nigel.
Well, that's right. And October went to the bears. The question is, can the bulls fight back? And if you look at it, the last week or so, actually the broader markets have suddenly started doing quite well. So most market men, most rational voices that we've heard, they've said that the large caps could outperform. But at least in the past week, the pullback has been far in, the mid caps, the small cap, as well as the micro cap, in comparison to what the Nifty has done. That's telling you the animal spirits are back. There is a fair bit of participation as well in the broader markets. And that sharp dip that we got, it seems to have got bought into. In the near term, though, you expect the headline index to be fairly volatile. What about the FIs? Well, they're diametrically oppositely, placed in comparison to what it was in the previous series. So at the start of the October series, they were net long, and we know what happened, right? They didn't get it right. The clients, on the other hand, they were net short. Now, this time around, the start of the November series, well, the clients are net long and the FIs are net short. I'll tell you what, this sort of a combination is not such a bad thing. In percentage terms as well, if you pull it up, the FIs, well, 27%, 23% of their positions are on the long side, while you have 77% on the short side. Two strikes were a bit active, the last couple of days, the 24,400 call, 24,300 put. And you just plug in some numbers, you look at the recent levels that you're looking at, and in the last week or so, almost every day we went to around the 24,500 odd mark. And the highs come up for you on the screen, almost on a day-to-day basis, 24,440 to around that 24,500 odd. And that's where the resistance zone comes in at. So 24,500, 24,550, that's the near-term resistance. You get support that comes in at around the 24,000 mark. That's from where we recently bounced up. And otherwise, if you're looking at a sharper correction, then maybe, in fact, the 200 DMA comes into play. But for the time being, at least, it appears the bulls want to defend this 24,000 odd mark. Stocks that I'm looking at, well, Welspun Corp, they just came out with an order win just a few minutes back. So they received a large order of around 1,300 crores odd. This is the second big order that they have received in the last 35 to around 40 days or so. And the US business has been struggling. This entire order gets executed in FY26. So that's the stock that I'll keep on my radar as well.
Okay, all right, got that, Nigel. So lots to watch out for individual stocks and, of course, market levels. Let's get started then with the equity call of the morning. Chetan Sheth of Nomura says that the coming week is possibly the most pivotal one for Asia ex-Japan stocks, with two major events on the calendar, US election and China's NPC meeting, which may have significant implications to the multi-month outlook for Asia ex-Japan stocks. He says Donald Trump is likely net negative for Asia ex-Japan, while Kamala Harris is net positive. That's Nomura. Remember, I was telling you that they're saying that the extent of the Chinese stimulus could be 20% higher if Trump gets to the White House.
Some Teflon coating, just in case, right? Anurag Singh is with us. He's managing partner at Ansett Capital. Anurag, good to have you with us here. Thank you for your time. Prashant this side. Just a quick word on the impact of US elections. Who's better for Indian equities, specifically, Anurag, in your opinion? Trump or Harris?
Prashant, morning. Monday morning to everyone. Prashant, I don't know. I was surprised when I hear a very comfortable pro-Kamala positive voices, right? I don't understand the economics in that sense. So first of all, we are based in US. For US markets, of course, Trump is better, right? And we saw that between 2016 and 2020. Even for Asia Pac, Prashant, I think here is what most markets underestimate. If Trump comes, it'll be kind of, we can pretty much assume that all the wars and geopolitical risk that can, go towards, some sort of settlement, right? Whether it is Middle Eastern war, whether it is Russia, Ukraine, and all of that. And I think if that happens, I'm sure that's going to be very, very positive for global market. So I think people just underrate the Trump's positive movements that can kick off, once he assumes the power. That said, Prashant, I don't know what the media says and what kind of media is getting circulated in India. but assume everyone is biased. But my sense is Trump is headed for a very strong victory. Now, I'm not a pollster, I'm not a political expert, but the feel is that the people have had enough of, the current administration.
Yeah, everyone, Anurag, you put it well. Everyone is biased. Absolutely. Just one thing, though, with Trump, and I completely agree with you. Maybe a better outcome for all these conflicts around the world. Maybe you will be able to get at least one, if not more, these conflicts to an end quickly. But the other thing is trade, tariffs, right? Now he's talked about matching tariffs and higher tariffs, not just for China, but matching tariffs for everyone. So if you want to sell in the US, we'll impose the same tariffs that you impose on US goods into any country. The other is, I mean, most are saying and those who agree with your point of view, that the dollar will be higher between 3 and 5% if Trump were to win. So how does that square for emerging markets? Anurag, go on.
So let's look at tariffs, right? Again, I think on media here, we quickly see the economists on the left calculating, 10% to 50% tariffs on flat tariffs on all countries, all products, and then they come up with some number. I think this tariff thing is just a bargaining chip from Trump's side. He's a deal maker, but at the same time, he's not the one who will kill businesses, and certainly not the US businesses, right? So in that sense, I think we can assume some pragmatism that he is willing to negotiate with countries, country by country. And of course, we don't assume that, US will become a, export surplus country. That's not going to happen. Things will keep coming from China and rest of the world as they do, right? So it is just to position that, look, I'm not going to give a free run to everyone. But I don't think it's going to be a blanket move or something like that. Outside of immigration, I think everything else will be very pragmatic and very, country by country, right? So that's on tariffs. Let's look at the dollar. Prashant, dollar is just mimicking the 10-year yields in US. I think as long as the 10-year yield keeps rising, and that's a seasonal thing in the last quarter, I think it will stay strong. But eventually, it will have to follow what happens within Europe and vis-a-vis the 10-year yield in US and rest of the world, right? So my sense is dollar will continue to stay stronger, mostly because European economies have their own struggles and they are really struggling between how to balance this. We saw the UK budget. There is a gap there and 10-year yields are rising there. So I think it's more a function of relatively where you stand, and US is still doing better there.
Anurag, hi. Good to have you on the show. So let's talk where you're putting money. Give us a sense on the portfolio mix now, and how much is it US equities? Are you putting some money to work here in India? And would you change anything depending on whether it's Trump or Harris? And we'll have the answers by Wednesday morning, right?
So Surbhi, look, I look at Indian markets. I understand there is a lot of money to be made in Indian markets, and there is, and there'll continue to be. But I think sitting here in US, you need to have that very fine sense. Especially most of the money in Indian markets is now being made in mid and small caps. Large caps being, having attained the sense of entitlement and the evaluation that they can. So my money mostly right now is positioned in US, largely because of the valuation comfort that we have out here. And we continue to like, within US, we continue to like technology, financials, communication, and discretionary, right? There is a lot of money to be made once if there is a Trump victory, banks will particularly do well. Energy may not do well because, look, there will be more drilling, so more oil consumption. Healthcare by default does well all the time, either administration that comes in.
Okay. Anurag, thank you very much for joining us. We just hope that we actually get the results by Wednesday morning, which is by this time here in India. And it's not, it doesn't go into a spiral and then we have to wait for a few days. Hopefully it's a clean one, right? And we'll see. And we'll chat again. Thank you very much for joining us here on CNBC TV 18. Well, let's get you all the corporate interactions which are lined up here over the next 2 hours or so. At 8:40, we have with us Amit Mahajan of Bharat Defense to talk about their second quarter earnings. 9 o'clock, you'll hear from Abhishek Kumar at JM Financial Institutional Securities. IT stocks slipped sharply after Capgemini revised downwards its revenue estimates. Divina Mehra will be with us at 9:20 to talk market. She's a market master of the day. 9:30, Bajaj Auto will be with us to talk about the October sales numbers. Vishnu Malpani of Azad Engineering will be talking to us at 9:40. They've signed a 700 crore contract with Mitsubishi Heavy Industries. 9:50, Narayana Health on their second quarter numbers. It's the economy with Lata. She'll be in conversation with Mitul Kotecha of Barclays, Neeraj Gambhir of Axis Bank, and they talk about the impact of US elections on India macros.
Well, time to slip into a short break, but we got a lot of stock-specific action to track in our special top 10 segment. We're looking at Mahindra & Mahindra, Eicher Motors, Hero MotoCorp, Tata Motors, Zentech, Azad Engineering, Premier Energies, as well as NMDC. All of them will be reacting to positive news flow, while you have Sun Pharma as well as MOIL that will be reacting to negative news flow.
Welcome back. So we've got lots and lots of news flow to go over and some earnings as well. So let's straight away get to the CNBC TV 18 list of top stocks to watch this morning. Can we see? I think everybody is here. So our team is standing by with, of course, the major ones for today. And Sudarshan, of course, has been looking at lots of those auto sales numbers. So Sudarshan, what's the report card for October looking like?
So October sales for all the auto companies are largely better than estimates. If you talk about the two-wheeler wholesales volumes are up 17% year-on-year, and for passenger vehicles it's up 2%. And if you talk specifically about the festive season, for two-wheelers retail growth was at 12% and passenger vehicles at 8%. That is largely better than estimates that all the brokerages were factoring. Now talking specifically about companies, for M&M, both auto segment and tractor segment have done well, and auto segment was largely led by SUVs, and for tractor, good monsoon has helped company to boost retail sales. For auto, total sales were up 20%. For tractor, total tractor sales have increased by almost 30%. For Eicher Motors, it has reported highest ever monthly sales for Royal Enfield, which has come at 1.10 lakh units and up 31% year-on-year. And company says all its new and existing motorcycles have continued to perform well, and with upcoming launches, company will be able to sustain the current growth momentum. For Hero Moto, again, highest ever monthly sales. It has reported total sales of 6.79 lakh units against our expectations of 6.30 lakh units. And also on Dhanteras, company has recorded growth that are in double digits. Last is Tata Motors. If you talk specifically about the Tata Motors on standalone basis, we were expecting sales to decline on YY, but sales were flat. And for JLR, company says Land Rover US retail sales were up 25%, and for Jaguar, US sales were up 4%. So overall, for the month of October, total sales were largely better than estimates, but two-wheelers have outperformed four-wheelers.
Okay, all right. Thanks a lot for that, Sudarshan. Well, let's hop across to Upasana. Zentech came out with the numbers. The stock has seen a big run, but those numbers look quite good, Upasana.
Totally, Nigel. Now, revenue EBITDA PAT beats street estimates, and companies on track to meet its FY25 guidance on the back of strong execution. Now, coming to numbers of the company, revenue stood at 242 crore, which was up nearly about 2.7 times. EBITDA stood at 79 crore, up almost about 2.6 times, and EBITDA margins took a dip of 110 basis points at 32.8%. This is mainly due to lower gross margins. Now, PAT for the company stood at 65 crore, which was up 2.8 times. Now, looking at company's FY25 guidance, mind you that the company is given a revenue guidance of 900 crores, and as of H1 FY25, the company's revenue stands at 495 crore. And FY25 EBITDA margin guidance the company is given, that is around 35%. So all in all, good set of numbers coming in from Zentech in its Q2 FY25.
All right, Upasana, thank you very much for that. So keep an eye out on that one as we open up for trade today. But Sun Pharma should also be in focus on the back of some not particularly great news for the company. Vinny is here with details. Vinny, good morning.
Good morning. Not such great news coming in for Sun Pharma. Now, what has happened is that over the weekend, the District Court of New Jersey has actually given a preliminary injunction for Sun Pharma. This was against Incyte, which had filed against Sun Pharma for this drug. This drug is called Lexelvi, and this is mainly used for the treatment of alopecia. Now, Sun Pharma had received a US FDA approval for the launch in July 2024, and then this issue that started between Incyte Corporation as well as Sun Pharma. And now this is not a favorable decision for Sun Pharma because their launch will be delayed because of this injunction that has come in. So obviously they will be appealing to the courts, but we'll have to wait out for a positive decision coming in on this front, because when you look at Nomura, they had factored in the earnings for this drug around $10 million in FY25, around $80 million in terms of revenue from this drug in FY26, and $150 million in FY27. So there will be some bit of an earnings impact that they are expecting on Sun Pharma, 0.4% impact in FY25 and around 3.1% impact in FY26. Nomura continues to maintain their neutral rating target price of 1,850, but this is surely a negative news coming in for Sun Pharma. Delay in terms of a launch where they were expecting good revenues over the next few years from this drug is a red for the stock.
Okay, Vinny, all right, got it. So Sun Pharma, not such great news this Monday morning. Thank you for that. Let's go across to Vamakshi. She's watching for Azad Engineering and Premier Energies. Vamakshi, morning. What's the news?
Well, good morning, Surbhi. Azad Engineering is expected to open higher because the company has signed a long-term contract as well as price agreement with Mitsubishi Heavy Industries Limited. They will be supplying highly engineered and complex rotating and stationary airfoils for advanced gas and thermal power turbine engines. And under the current phase of this contract, it is valued at $82.89 million, or roughly around 700 crores. So it's a big contract coming, for Azad, and given that I'm going with the green for this counter. But apart from that, keep an eye out on Premier Energies as well. Subsidiaries of the company have received multiple orders from 2 large independent power producer customers, and these orders in total aggregate to 560 crores, which includes 513 for their solar modules and nearly 47 crores for their solar cells. The supply for the same is expected to commence from December of this year onwards. So overall, it bodes well for the company. So going with the green for Premier Energies as well.
Indeed, the solar modules and cell companies, they've been winning orders and looking quite strong. Waaree Engineering as well, Energies, that one ended at the high point of the day, even on the Mohra trading session. Well, let's get to a couple of stocks that I'm tracking. MOIL, they have revised their prices lower for different grades, but that's more or less on expected lines. So we'll see whether the stock reacts, because we already have an international benchmark. So that's one stock. The other one is NMDC. Out there, actually, the production and sales numbers are looking good, particularly for the month of October. So the offtake has improved dramatically by close to around 17%. Year to date, still it's as flat as can be. Till the past month, actually, it was a degrowth, but post the good performance in October, well, there is a flattish number that we're seeing, which is good news. The stock could react positively in trade today as well.
Okay, so MOIL and NMDC also make it to our list. With that, actually, let's recap all the stocks that you should keep on your radar today. The ones that have positive news flow around them are some of the auto names like M&M, Eicher Motors, Hero Moto, Tata Motors. Then there is Zentech, Azad Engineering, and Premier Energies on some of the auto wins. NMDC as well on the better October performance. Stocks with negative news flow are Sun Pharma and MOIL. So more green than red today. Okay, let's go across to Manisha now and get a roundup of all the commodity cues that we are getting. Manisha, morning. What a heavy week, right? So many triggers from the Fed meet to the US election. What's the overall sense you're getting?
Well, absolutely. With all of these events happening, it's the gold prices which seem to have firmed up yet again as the week has begun. The US dollar decline has been another added factor. So, well, yes, US presidential elections, US Fed rate decisions, but it's not just the US who's headed for a Fed rate decision. It also is about UK, Australia, Brazil, Poland, and a few other countries which also have monetary policy meetings this week. So the week promises to be quite eventful there. But the best of gains really have come in for the crude oil prices right now, with OPEC and allies deciding to delay output hike yet again is something that really seems to be supportive. Well, it was earlier also delayed by 3 months and now done by 1 month is what we understand. 180,000 barrels per day of an increase, which was expected to start from 1st of December, will now happen from January, is what the OPEC and allies have said. So that really seems to be supporting the markets. Well, there also are statements that the China National People Congress meeting that is slated to happen between November 4th to 8th could announce $10 trillion of a stimulus, and that seems to be supporting base metal prices also. So overall, most of the commodities have opened Asia on a firm footing today.
All right, Manisha, thank you very much for that. So there's a lot of printing expected, a lot of fiscal stimulus expected, and gold is the beneficiary. Gold and precious metals are the beneficiary, of course, trading at an all-time high. We'll take a quick commercial break here. Prakash Diwan will join in with some stock-specific ideas when we return on the other side. Stay with us.
Welcome back. Let's get the fundamental conversation going. We have Prakash Diwan joining us on the show this morning. Prakash, always good to have you on. Hope you had a good festive weekend. And I'm actually going to go back to the stock that we were discussing on More a Day. I'll start from there because we want to discuss your take on the auto numbers. And once again, it's Mahindra & Mahindra standing tall, 20% growth when it comes to their passenger vehicle business. And even tractors have started firing in. Now, what about the stock? It's already had a dream run in the calendar year, but it is off about 10% from the peak. How much more on a Mahindra & Mahindra? And would you still advise buying in now at these levels? That's the question.
Good morning, Survi. That's absolutely $1 million question. What do you do with a stock that's performed so well over the last couple of years, has done well even in this year? And there's still, this doubt that people have on whether, this rotational change, the sectoral rotation that you see in the markets typically on closer to peaks, will autos be out of it? Now, my sense is if you look at the numbers, they are in sharp contrast to what the Bajaj Auto management commentary was, right? The anticipation was probably they were trying to manage expectations and, people read it as a caution. But numbers tell you that buying has come back, especially the two-wheeler side. What's interesting about the M&M numbers is I'm not surprised at the bump up that they've seen on the SUV portfolio. That was bound to happen. They probably lead that portfolio by a decent margin. People haven't been able to compete as much. It's the tractor segment, which is the most interesting, which has seen a pickup after a fairly long gap. And seasonally, of course, this is a good month to start looking at improvement there. My sense is if that happens, you could probably, the second order effect is look at Escorts Kubota. That is a stock that also kind of rallied, lost some ground, has come back to a level where it could probably, do some tactically for the next 6 months, it could probably outperform a lot of the other auto names. On M&M especially, I think each of the businesses is waiting to kind of start scaling up on its own. Whether it's the EV portfolio, and remember, they're going to be launching the EV3 or whatever that new series of portfolio vehicles that they have this year. So in 25. So if that were to do well, they'll start competing in that segment very, very aggressively. So M&M has got more sum of parts kind of a thing. There is room, but it'll probably take some time. But Escorts is what you need to look at.
Anything else? Hero, because the two-wheeler guys, like you're saying, TVS has done well, Hero has done well. And I don't know, would you be a contrarian at all? They say you have to buy great businesses when the tide is, not high, all of that. So I don't know. Maruti or even a Hyundai, I don't know. None of the numbers are going in their favor, but would you buy now?
No, I think rest of the names have a valuation, don't have that kind of valuation comfort, and especially because most of the good stuff is priced, especially two-wheelers. They'll have to continue doing well to justify where they are. So you'll probably start seeing things happen after Jan. And, this is a market, phase of the market, where you will probably get very good entry points, is my sense, till about Jan, Feb. So I'm not in a hurry to add anything new unless it's compelling enough from a valuation perspective.
Hi, Prakash. Good morning. What's the view on NMDC? Finally, the dispatch numbers are looking better in October. They were disappointing the previous few months for a whole host of issues, whether it was rains and some environment clearances as well didn't come, regulatory clearances didn't come about. But your view on the stock?
Good morning, Nigel. So I think it's definitely, let's look at what could happen on the metal side, on the ferrous side, that is, globally. And if the China demand continues to remain up, and if there is this whole anticipation of a stimulus and a higher stimulus, I don't see any reason why the metal rally will sputter out. And from that perspective, ores will continue to do well. In fact, there's always this lag. And you just started seeing, iron ore kind of come into that phase where it has started matching up or trying to catch up with the underlying metal prices. So my sense is NMDC is very favorably poised. It's just that execution of some of the, expanded capacity is something which could take longer than what you anticipate. And if that doesn't kind of come in the way, you'll probably see a very nice secular uptrend going into the next 6 to 12 months. So quite positive on that. And there is valuation comfort in this case. There's nothing that you're overpaying from a price to book or, even the price to earnings growth kind of a model. So my sense is NMDC does make sense for, in fact, these are times when you buy these kind of stocks which are boring, which are slow to grow, but they do grow. So look at that. No fireworks, but yes, very positive.
Okay, all right, got that. Prakash, stay on. We need to discuss a lot more other stocks with you as well, but let's quickly get an earnings call in. Paras Defense is the company and the stock on our radar, and the company delivered a good performance for the second quarter gone by. The revenue growth was fairly strong. In fact, I'm looking at numbers now. Look at this. Revenue is up 43% in the second quarter, and revenue has grown 55% in the first half of the year. Not just this, all of this is happening with pretty smart margin expansion. Plus, they've announced a lot of new order wins in the third quarter as well. So let's put it all together and get a full outlook going with Amit Mahajan, Director Technical and R&D at Paras Defense. Amit, good to have you on. And I really want to start over there because you have been, till now indicating that at an annual basis, you'll grow at 20 to 30%. But look at the second quarter, look at the first half, you're growing at 55%. So you want to increase the outlook for the full year itself? Are we talking about more than 50% growth in FY25?
Firstly, good morning and wishing you all a very happy Diwali. I think indeed, yes, this festive season has brought in a lot of smiles on our faces. I always maintained that 20 to 30% was a conservative one because when you're working in defense, you're working on national security projects, a lot of things depend on the platforms that are to be developed. But as you see, the tailwinds are on our side. Most of the development efforts have gone past in the past few years. What you see today is an amalgamation of a couple of things. One, a very, very strong order book, which we have and we continue to maintain. And along with that, what is happening is the phase of our transition from a component manufacturer to a complete system manufacturer is almost giving you the results that you can see. So the submarine periscope that we've started deliveries, the effect of our electro-optics division doing well, and defense engineering stepping up. If you see the contribution that defense engineering has given in this particular quarter or the whole H1 to take with is substantial. And that along with profitability, this is something this is going to be the new normal. And I think, yes, my estimates were conservative and I would like to keep it that way.
You'd like to be conservative. Okay, got it. But I think the actual numbers are speaking for themselves. It's interesting that you brought up this whole transition aspect where you're moving from being just an individual component supplier to being an entire subsystems manufacturer. Is that the reason why the margin profile has also improved? Again, I'm looking at first half numbers for a wider picture because from about 24% margin, you're at 27%. So is this the new run rate? Would you end the year at 27% and is this a sustainable level?
Yes, this is the new run rate. And the reason for this is when I'm making a complete system, consider me to be the manufacturer of most of the components that that I'm putting it together. So I'm retaining a lot of value in the system within the company. And that is giving the boost to my profitability.
All right. Hi, Amit. Good morning and good to see you in. So what should we work with in terms of margins then? We should work with this 25 to 27 range. Would that be fair?
Good morning, Nigel. Always nice to talk to you. Yes, you can look at, I would rather say 25 to 30% because the Q3 and Q4 are yet to come. These are legacy-wise been very, very strong quarters for us. But I think I would be conservative by saying whatever way we are going, we will maintain Q3, Q4, and the margins would look similar or slightly better.
You know, by the looks of it, it seems that you want to surprise the street at the end of the third quarter. So let's see whether or not that happens. A couple of other factors. Defense engineering is 55% of their mix right now. Where do you see that number stabilizing it? And also, if you could give us an updated order book. As on date, what is it? In the past, you have said you expect the order book to scale, I think, to more than 2,000 crores in the next few years. But by the end of this year, where do you see this number stabilizing at?
So the order book already stands at in excess of 850 crores.
Yes.
So that's a good visibility for a company like ours, where if you see the last year's revenue, you're looking at anything beyond 3x, and that's something which is way ahead of our estimates. We're going to be very, very comfortable if our order book is in excess of 2x, because that gives us good visibility for the next 1.5 to 2 years. And I think we as we speak, our order opportunity size is swelling, like it's going beyond our estimates as well. So it's all good. The order book will sustain. It keeps coming in although we deliver, our order book still keeps growing. So everything looks fine. The opportunity size also is getting better. The space sector is booming. The electro-optics division and the opportunities related to electro-optics are doing really great. Our subsidiaries opportunities have also multifolded, although they have not contributed to any revenues. But the RF and microwave division has substantial opportunities lying in front of them. And the Control Paras JV, as you already know, that it has a great funnel.
All right, Amit, we'll leave it there. You're sounding very, very confident, at least in terms of the runway for work, right? And so no problem with regards to the amount of work that is available for you in various sectors as you outlined. That's Paras Defense. Let's turn our attention back to the market and let's bring in Anuj, who's standing by. Anuj, good morning. It's a big week.
Morning, Prashant. Big week indeed. A lot of global cues. Arguably the biggest week of the year for global market. And of course, for our markets, the new day, new week, new month and new Samvat. So let's see. October was a painful month for the bulls. November started well, albeit with low volumes on the Muhurat day. But you know what? The mid and small caps started to show some signs of life last week. So let's see if that can continue this week. On the Nifty, there are two levels that I'm watching out for. On the downside, the October low of 24,074 is the most important level. And on the upside, the 20-day exponential moving average of 24,661. That's the most important level to watch out for. In terms of Nifty outlook, the first support is 24,172, Thursday's low. And then the bigger support is 24,073, the series low. The resistance comes in at 24,372, Thursday's high. And then the bigger resistance is 24,450, 24,500, the expiry week highs. For 5 days in a row, the Nifty fell from this zone of 24,450 to 24,500. So that's why that becomes an important level to track. On the Bank Nifty then, the levels that I'm watching out for, it's one shade better than the Nifty, of course. Also defended the October lows. The first support is 51,300 to 51,350. And then 51,000 to 51,200. And then, of course, on the resistance, you have 52,005 to 52,220. And then the bigger resistance is 52,500 to 53,000.
All right, Anuj, thank you very much for that. So that's the setup this morning as we go into our session. We'll take a quick commercial break here. We will come back in just a bit from now. A technical sort of experts, Mitesh and Sudarshan, with what you should be doing with regards to individual stocks. Stay with us. Okay, welcome back. There's 14 minutes to go for the pre-open session to kick off. Now, markets are starting somewhat 2081 on a healthy note, with frontline indices gaining up to 1% or so. This was, of course, after the Muhurat session that we saw on Friday. We spoke with market veterans Ramesh Damani, Samir Arora and Atul Suri, who shared with us the big themes that they are watching out for and betting on indeed in the new Samvat. Listen in.
I think the two themes that we're betting, not necessarily from Samvat to Samvat, but over the next 3 to 5 years. The first theme is this, what I've said previously, the digital public infrastructure India has leapfrogged a generation of infrastructure from analog to digital, from highways to PAN card issuance. So I think there are maybe half a dozen companies and they're still trading at fairly modest market caps. Not necessarily price to earnings ratio, but modest caps. And compared to the opportunity that I see ahead for them, these companies are buy. So whether it could be eKYC, it could be PAN, it could be Aadhaar, or ONDC, enormous opportunities in front of these companies. I think some of these companies will prove to be great winners over the next 3 to 5 years. So I certainly would invest in them, but not for 1 year, but over 3 to 5 years. The other sector that surprised me myself, which I have bought, is the pharma space. And we're all familiar with the Dr. Reddy's and the DVs of the world, which are outstanding leading companies in this sector. But we've looked at the smaller mid-cap companies which are developing intellectual property from things like obesity vaccines, dengue vaccines, obesity pills, dengue vaccines, antibiotics, new range of antibiotics. I think there are a lot of rich pickings surprisingly in that sector because for the first time these Indian companies are doing genuine, serious intellectual property. I think the market will start recognizing and rewarding them over the next 3 months. So marginally, wherever I put the money for the things that I've sold, I put it in DPI and I put it into the pharma space.
If you look at last 3-year returns, Nifty is up less than 12% per annum. You can do it from today back 3 years, or maybe 12 point something. And the 500 is up 15 point something per annum for 3 years. In those 3 years, 4 years of 2004 to 7, the 500 index was up something like 40% per annum for 3-4 years. So this bull run is not like that. But the one thing that has spoiled it a little bit is that the results of this quarter are pretty mediocre. And therefore, I think, depends on what you call a bull run. We call a bull run as somewhere in the range of our history, which is mid-teen, more than debt, more than other things, but you're not going to make 20-25% with these kind of results.
There is no sector or theme that is absolute clear-cut winners. What you're seeing is in every sector, there are going to be winners and losers. So I do feel for the next few months, things may be a little more stock specific. But beyond that, I feel that the government, the country's macros are fantastic. As I said, the government has a lot of bullets. The bullets have been retained. They've not been fired. And I do think that the government will take action to revive the flagging demand and the economy. And I do think that maybe towards the second half of the year, the market would really do a big pullback. So that's my sense. Going to be a little mixed, more stock specific in the next few months. But the second half of the year, I feel, would be much, much better at an index level.
Okay, let's get to our technical experts who joined in on the show. Mitesh as well as Sudarshan join in. Good morning, gentlemen, and hope the weekend was good. Happy New Year to you as well as your family. Well, let's take stock of markets. Mitesh, you go first. The GIFT Nifty suggesting a 60-65 point pullback. What's your view? Would you look to buy into the dip, or do you think that things will be far too volatile? You'd rather not trade the index?
No. Good morning, Nigel. Seasons and New Year wishes to you and the entire CNBC family. I think, the Nifty has clearly defined zone of two levels. On the upside is 24,500 and then 24,800. And on the downside is about 24,170, 150 area, where in the last 3-4 sessions, we have seen the intraday low being made around these levels. The overall structure is weak, but also is the fact that this 24,170 is now emerging as a strong support pivot. There's a trend line support there as well. So the way to approach the market is that you go short if it breaks 24,150, or you go short around 24,500 and take a 50-70 point kind of a stop loss. Unless until you see a weekly, some kind of a strong reversal on the hourly and the 2 hourly charts, I won't be, inclined to take long positions. So for the time being, the bias is slightly negative, but around 24,150, 170, if the decline again stops, then you might get a 300-400 point kind of a bounce back, and you might want to take a long position with a very tight stop of about 50 points.
Got it. All right. So 24,100, that could be a level where you want to take a bit of a buy call, but otherwise, for the time being, staying out of it. Sudarshan, what about you?
Yeah, good morning. See, the Nifty is now in a trading range for the last 6 days. 24,000 approximately and 24,500. And today we are likely to open right in the middle of this range. Now, once we are in a range, well-defined range, and we are not on the boundaries, but in the middle of it, there is no trade. So I would suggest that it's best to avoid the Nifty and the Bank Nifty till a much clearer picture comes. Remember, last time 2 weeks ago, the Nifty went inside a range and eventually broke down from it. So we don't want to find out where it goes till it actually decides. My view would be focus on stocks, just let the index be.
Okay. Gentlemen, good morning. Mitesh, what would your trades be? Stock specific?
I have a mix of buys and sells, and technology still, after that decline which happened in the last week, still looks like could possibly see slightly lower levels. So Tech Mahindra is a sell with a stop at 1621 for targets of 1560. Disclaimer that we have some put spreads on the bearish side, so there's vested interest. HCL Tech is a sell with a stop at 1780 for targets of 1720. A buy on ICICI Bank on a mild decline, say around 1282.83 with a stop below 1263 for targets of 1320. And a buy on Bank of Baroda. It's a conditional buy. I would want to see the stock price get past 255, and then take a buy position with a stop below 249 for a target of 270.
All right, Mitesh, got that. Thank you for it. Sudarshan, over to you. What about individual stock level action? What would you go with today?
Well, I would go with an all buy list because of the trading range market, the larger trend is still up, and we are in some kind of an oversold area. So stocks can be considered for buying, starting with Chambal Fertilizers. Consider buying with a stop under 470. Cipla, which had a big gap up, and the chances are that the uptrend that started due to the gap will be sustained. Buy with a stop under 1520. Coromandel, again, there is a theme apparently going on in fertilizers, which is reflecting in the charts. Buy that with a stop under 1640. And finally, Escorts is a buy with a stop under 3610. So there are a lot of mid caps which are now giving signs of life.
Okay, all right, got it. Thanks, gentlemen, very much for that. We'll come back to you in a bit as we start, moving towards market opening. Right now, a quick break. We'll be back with the pre-opening trades, and Abhishek Kumar of JM Financial Institutional Securities will join in. IT stocks, remember, on Thursday were under heavy selling pressure because of some concerns in terms of global majors like Capgemini. So what lies ahead? We'll discuss this with him in just a bit. Welcome back. So the cues overall have been all right. I mean, Asian markets have been largely in a shade of green, and in terms of individual stock action as well. I mean, our list had more green than red this morning in terms of the stocks to watch. Let's go back and take some more comments from Prakash before we go on. Prakash, I don't know if you managed to hear that conversation that we had with Paras Defense. I mean, the company is sounding very optimistic. Numbers have been showing up as well. Now, defense was a great theme till we got into the midst of this October correction. I don't know. Do you see it coming back anytime soon? If not defense, if you sort of widen that to other PSUs, would you look at anything today? For instance, some railway stocks are reporting today. We'll hear from IRCTC and IRFC. The numbers are today.
Surabhi, what happens is when smart money pulls out of these high-valued sectors or themes, it starts looking for value in other sectors and themes. I doubt if defense has come back to a stage where it offers value again. There could be growth, there could be, and hence there could be momentum at some later stage. So to answer your question specifically, I don't think railways and defense coming back so distinctly so soon. It could probably happen only middle of next year when the earnings start justifying that. Because Paras, for instance, I mean, with the 88 crore quarterly run rate, it could do well in the next 2 quarters, but still, end of the day, you just have about 101 P multiple. So that's quite stretched. I would look at things much later. The rotation will get you much of, what Mr. Damani mentioned. I think some of the names like Protean, governance and all of that are so promising. He didn't name it, but all the businesses that he described are residing in that name. Look at some of those names, NPST. These are names that you would look at from the next wave of growth much more safely as compared to defense.
Okay, all right. Prakash, before we let you go, I want to understand what's your view on Welspun Corp. The stock went very close to around 800 rupees, and then it came down to around 700. It's been in a bit of a range, but earlier, around an hour or so ago, they won an order of around 1,300 crores. That builds on to another 2,400 crores that they won in the United States just a month or so ago. So now United States business that wasn't firing for them is going to look blockbuster in FY26. What's the view on the stock?
No, I think you're right. I just read about this new order that came in the morning. But, would you really wait for the US tariff, potential tariff, revision announcement after the presidential election outcome is known, and then buy it or not? That's the question. But their order book, as you rightly said, is very clearly in place. The worry is now only beyond FY26 what goes through. So from that perspective, there is some room for growth. The price hasn't adjusted to this new reality or this new salience. You could probably see at least a 15-20% kind of this thing. It's a great stock to add on dips. The management also has envisioned a huge expansion for all its businesses, including Wellcop. So I think it's quite positive. If you're okay with the run-up that's happened in the last 1 year, don't look at that. Look at what could happen going forward, and it definitely seems to be a market outperform.
Okay, all right. Got that, Prakash. Thanks very much for that. I think we also will have Chandan Taparia joining us in the next couple of minutes. The pre-open rates are also kicking in. Let's see, right now we've got a bit of a red gash, but it's not even a minute. So we'll wait for the pre-open to settle. Chandan, hi. Festive greetings to you. Hope you had a great Diwali weekend. Tell us, how do you look at the market setup now and what are the trades for today?
Good morning, Surabhi. Thanks for having me. Yeah, we really enjoyed Diwali and my extended weekend is still going on. And wishing everyone again a happy new Samvat, new year. So talking about market, it remained range bound. Nifty has got stuck in a range between 24,100 to 24,500 zone from last 7 trading session. We witnessed some profit booking on Thursday, but on Murat Day, it witnessed some recovery of 100 points and remained range bound. But still, we are in a range where supports are intact, but multiple hurdles are visible in the market. If I come with the weekly chart, I'm getting the sense of lower top, lower bottom. But on the daily chart, some sort of support-based buying is seen in the market. Looking at the data internal, we have seen a spike in India weeks, but at the same time, your put-call ratio is rising. So somehow getting the sense of range-bound bias between 24,100 to 24,500 zone. For the day point of view, Nifty needs to hold about 24,250 to witness some recovery to higher band of the trading range. If 24,500 is surpassed, then short-term bottom could be placed in the market as of now. Looking at the Bank Nifty index, here we have seen some recovery on 3-4 days back, but now the range-bound bias is clearly visible. Supports are intact, but upside is being kept. So 51,250 to 52,250 is broader 1,000-point range for Bank Nifty, and it requires a decisive range breakout to commence the next leg of rally. Now, looking at the stock-wise, we believe that selective stocks can do well in such kind of market scenario. First, it is buy on City Union Bank, a long consolidation breakout, holding well from last 2 weeks. Stock is inching upwards with high top, high bottom. Rollovers were better, which indicates further momentum could be there. Even after the profit booking in the broader market, the stock is holding well, which clearly indicates a rally towards 186. One can buy with support of 174. Second trading idea, there is buy on MFSL, Max Financial Services Limited. MFSL has seen a positive price pattern similar to a pole and flag on the daily chart. Strongest sector, positive price pattern indicates up move could be there. We have seen some build-up of long position, so one can buy with support of 1260 for a target till 1340 level. Last trading idea, there is buy on Coromandel. Coromandel has surpassed its falling supply trend line on weekly chart. It has seen a breakout from its falling channel and turning upwards. We are expecting some short covering. Declining volatility of the counter also indicates some surge, so one can buy with support of 1660 and Coromandel can head towards 1760 marks.
Okay, all right. Chandan, good speaking with you and good getting that perspective as always. Thank you very much for joining us here on CNBC TV18. Chandan Taparia there with some specific trades coming through. The pre-open is kicked off, about 38 points, 20 points, 25 points. So, I mean, trying to find a level, 24,335 or so is where it is trading at right now. IT services stocks all sold off on Thursday sharply. And then on Friday during the Muhurat session, we ended barely, the IT index ended barely in the green. Capgemini cut their revenue estimate for the year. And that is basically, that caused that big reaction on Thursday. Abhishek Kumar is IT research analyst at JM Financial Institutional Securities is with us. Abhishek, good morning. Good to have you with us here. Thank you for your time. Just your thoughts on the reaction that we saw. Was it, I mean, what does it mean for the Capgemini outlook mean for IT companies, and what does it do to any hopes of revival?
Yeah, hi. Good morning, and thanks for having me here first. So I think Capgemini's guidance cut was largely because of the slowdown that they are seeing in European market. That is something that has been flagged off by Indian IT services players as well. But we need to keep in mind that Capgemini has much higher exposure to Europe and France in general, which is witnessing a slowdown. So I wouldn't read too much from Capgemini's guidance cut for India IT services players. Even Capgemini and a day after Cognizant, right, they said that spend patterns are improving, especially in US and BFSI, and which is a common theme in terms of commentary across players. And I think that is a slightly, better gauge of how the demand will shape up, in FY26.
By the way, those are numbers coming in from Bajaj Auto, and interestingly, they've actually missed the mark slightly. Very, very flat trends for the month of October. This total sales growth has been just about, I think, 1.5%. So pretty flat. 4.79 versus our poll, which was expecting 4.89 lakh units to be sold. We'll, of course, be talking to the company as well as we go forward, try and get an assessment. They've kind of flagged off some of these demand concerns even earlier. Though one would wonder, one needs to look at the details, because some of the other companies like Hero, for instance, they've had a very, very strong October. Hero's sales are up about 18%, TVS is up about 14%. So we'll try and figure out if there's been some sort of pushback of demand into the coming perhaps months as well. So that's Hero MotoCorp. But back to the conversation on IT and what the read-through from Capgemini really means for us. Now, Abhishek, we've seen a pretty decent move on a lot of IT stocks even after the Q2 numbers, though I don't think any of the larger companies are screaming from the rooftops and are saying that, hey, we're getting back to double-digit growth. So now in terms of expectations on earnings and what the stocks have done, what would your advice be on large cap IT?
Yeah, so you're right. After the results, we didn't see much earning upgrades for large caps. We saw for a couple of mid caps, but for large caps, earnings were largely flattish. And a negative reaction after no earning upgrade tells us that, multiple re-rating that we were seeing for past 3 to 6 months is kind of has run its course. And for incremental movement in the stocks, we need earning upgrades to come through. So that's the setup. Having said that, I think, I believe we are in a better position now getting into calendar year 25 versus where we were a year back or at the same time last year. And I say it because, the uncertainty around rate cut is now behind us. US presidential election outcome will be over by the time budgets are freezed. Clients will have clarity getting into next year. We are already seeing early signs of discretionary spending coming back in banking sector, which generally is a precursor. So while we may not see any triggers in the next 2-3 months, given a seasonally soft Q3, I think the setup for IT budgets, etc., next year definitely looks up. And the recent correction that we have seen in large cap names kind of opens up some upside for people to take position in these stocks.
Okay. Hi, Abhishek. Good morning and good to see you, Ben. Let's wind the conversation down then with your top picks from the sector.
Yeah, so we like Infosys in large cap, followed by Tech Mahindra and Wipro. So that's my picks on the large caps.
Caps. Mid caps.
Mid cap, we like Persistent Systems. It has done very well. We also like Coforge, but our pecking order would be Persistent followed by Coforge.
Got it. Thanks a lot, Abhishek. Appreciate you joining in and giving us inputs on the sector and how you see things shape up. Wishing you a good day ahead. Well, it's 9:10, so let's get Sudarshan back in. Sudarshan, what's your 9:10 call?
Well, consider buying Coromandel with a stop under 1640.
Mitesh, what about you?
I'll go with a buy on BOB if it starts trading about 255.
Okay, all right. Mitesh, I want your view on HDFC Bank. You know, that one seems to have made some support at lower levels, but it's still to cross that 1800 odd mark, which it did earlier this year. What's your view on the stock?
So I'm quite positive. It is clearly outperforming the markets. Two, I think 1780, 1800 is my first target zone. I think once it clears that, we'll have a bigger rally. But for the timing, that's the trading target. And traders looking to buy into this one should keep a stop below 1710.
Got it. Okay. Thanks a lot for that, Mitesh. We'll come back to you at around 10 a.m. today. But let's focus on a few names. And Sudarshan joins us to tell us more about MCX. Okay. All right. I think we'll go to Sudarshan and MCX in just a bit. For the time being, Vinny joins in to tell us about the news flow on Sun Pharma. Vinny?
Yes, so we have a news flow coming in from Sun Pharma over the weekend where the company said that the district court in New Jersey has actually granted a preliminary injunction which was Insight Corporation had filed against Sun Pharma. This was for the drug Leqselvi. Now, over this drug, you know, they had received an approval from the US FDA just in July 2024. But then since then, there have been some issues coming in, and now this injunction means there's going to be a delay in terms of the drug launch that one is expecting. What brokerages are saying, and specifically Nomura, they have highlighted that, you know, for the revenue from this drug that estimated and priced in around a $10 million sales coming in FY25 from this drug, around 80 million in FY26 and FY27 a $150 million sales from this drug. So over the next 2-3 years, they were expecting around a $200 to $300 million sales for Sun Pharma from this drug. So we will be seeing some bit of an earnings impact coming in on this because of the delay. This drug is mainly used for the treatment of alopecia. Keep an eye out on this one. Sun Pharma is expected to be a bit subdued in trade.
Okay, all right. Thanks a lot for that, Vinny. But let's go to Sudarshan. As promised, he's here to tell us about MCX and also give us a few inputs on Mahindra & Mahindra. Sudarshan?
So first talking about MCX stock performance, if you check off the last 1 year in 2024, stock has doubled. And if you check since October 2023, when the stock migration was done to TCS platform, stock has almost, it's 3 times. Now, in the last 3 days, stock has been volatile. Now it's down 5% from the record high. So we try to find out if there is any reason of this stock fall in the share price. And the data crunching of last year suggests that this month, that is in the October, average daily turnover growth has slowed down considerably. On YOY basis, October turnover is up 55% versus average growth that company has seen of more than 105% in 2024, that is from January till September. Even on month-on-month basis, we saw turnover declining in October. It's down 21%, and it's the biggest decline that company has seen almost, I would say, in more than a year. So we'll have to say that if there is a reversal in the trend, or in the month of November, again we'll be seeing the growth company registering of more than 100%. That we'll have to see. Now coming to M&M. So we have a few brokerages that have upgraded the stock, and this has come after the company has reported sales for both the segment, that is auto and tractor, and sales for both the segments have come in higher than estimates. GS Goldman Sachs is a buy call and target is with 3,600 per share. Also, it has added the stock to Asia Pacific conviction list, and it says SUV order backlog and upcoming battery electric vehicles will boost the growth, and farm equipment is entering a phase of improving underlying market dynamics. Kotak Institutional Equities has upgraded the stock to buy, and target is with 3,150 per share. It says company will continue to outperform industry growth, and tractor segment is expected to witness uptick during H2 of FY25. Even on the valuation front, it finds stock trading at an attractive valuation.
Oh yeah, M&M has been the sort of the North Star, right? The shining star for the auto sector. Sudarshan, just very, very quickly, I don't know if you had a chance to look at the Bajaj Auto numbers that were just flashing. I mean, an 8% drop in domestic sales. Was this kind of a lackluster performance expected? Because the other two-wheeler guys have all done really well, right?
Total sales have come in below estimates, and the concern is domestic. Now, if you just check the Hero's commentary, what did they say? They said that the 100cc segment and 125cc segment for them have done well. And now just go back to Bajaj Auto's comment after Q2 earnings. What did they say? In this segment, that is 100 and 125cc segment, company has been losing market share. So I'm just assuming that this might be one of the reasons that Bajaj Auto's total sales are coming below estimates.
Yeah, I think that's a very valid point. We'll keep that in mind, that maybe it's the entry-level bikes that have done really well in rural, which is why Hero's done better than Bajaj, at least in October.
Yeah, but I mean, if you compare it by margins, Bajaj margins
are
absolutely
head and shoulders higher.
So maybe play in the slightly higher, not slightly, but the higher price and sort of more premium bikes in that sense. So that's Bajaj in the pre-open. Let's have Hero up as well. Take a look at what Hero is starting at. And then we'll look at Mahindra & Mahindra. Hero is starting about 2% higher. So, I mean, it's a small pop, nothing major. 51.27. Mahindra & Mahindra. Of course, M&M has been guiding for better growth in the tractor segment. So, keep that in mind. Stock starting about 0.5% lower, 2,800 or so. Look at MCX as well, which Sudarshan was pointing to. MCX, of course, sold off very sharply. I think it was Thursday session when it came off very sharply. And there were talks that maybe there'd be a large block and this buzz, but sort of course highlighting the volumes as well. Well, you got the market, which is starting slightly lower. Nifty is down about 0.25%, 24,260. Nifty Bank is starting at about 51,600. It's down about 0.1%. The Sensex is down about 0.25%. Mid-cap index is down about 1/3%. So that's where we are starting at. IT index is 0.6 lower. The IT index on Thursday sold off. I think it ended about 2.5-3% lower. Friday was just about in the green. The heat map coming into view on the Nifty, the 50 stocks, it's what 35 stocks lower and about 15 stocks which are starting in the green. So overwhelmingly, it's down. You're basically just reversing, that 1 hour 80-90 point gain that we saw during the Muhurat session with this near 0.5% cut on the Nifty so far. But let's get to stocks. Sir.
It's all about autos and extreme sort of, divergent moves playing out. Look at Bajaj Auto. The stock is down 2.5% this morning. And even if you look at the decline from the peak, Bajaj Auto is now the stock that has fallen, the third, stock which has fallen the most from the peak. First is IndusInd Bank, second is Tata Motors, and then there's Bajaj Auto. The cut from the top is now almost 25% from Bajaj Auto. So that's been the kind of price adjustment that's been happening. On the flip side, you have Mahindra & Mahindra. The market is continuing to reward the fact that they're building on those gains, building on the good performance. So 3.5% up on Mahindra & Mahindra. There's some buying on Eicher Motors as well. So that's how it's playing out. There's some buying on Cipla, about 2.5% higher. The good run from last week is continuing for Cipla. But again, if I flip it to a Sun Pharma is the poorest performing stock on the Nifty right now because of that legal issue in the US. They won't be able to launch one of the key drugs that was anticipated. And there could be a hit of, about 2%, I think, this year to the estimates, and more than that for next year as well. So Sun Pharma, Bajaj Auto are the two weak names. The Nifty is now down 150 points. Infosys, Reliance, BEL, BPCL, there's L&T as well. Lots of large cap stocks looking at selling. The Bank Nifty is down about 0.5%. So there's Axis Bank as well on the way down. But I think Reliance and Infosys are the two big boys, along with L&T. They're really, really putting in the pressure on the bulls this morning. We don't have much leadership to speak of as of now on the upside, apart from names like M&M and Cipla. There's a bit of buying on HCL Tech and Tech Mahindra, but nothing more beyond that. So it's turning out to be a tough morning. The Muhurat chair was short-lived. And again, we're dealing with a 150-point cut straight away at the start.
Well, that's right, Surbhi. A few stocks that were doing well in the last few days that have come in for selling. Prudent Corp, that's down, I think, close to 8-9%. So the stock had done well, actually, in the past week. That's come in for some profit-taking. Poly Medicure, I think the stock did a 25% run in the past week itself, post its results. But that one as well is lower in trade, and volumes are fairly decent on that one. Lokesh Machines, that's another one that's down close to around 6.5%. So volume's not very, very high on that one, but that stock is lower. KEC International as well, the stock is down close to around 5% as we speak. So that stock has taken a bit of a hit. Bajaj Hindustan is another stock that's lower in trade. Zomato among the top volume movers. Zomato as well as Suzlon, both of them have come in for some profit taking. So keep an eye out on both those two stocks. Vare Energy as well, it ran quite well post its listing. Listed at around the 2,400 mark. It went down to around 2,250 odd. And from there, it headed towards 3,000 rupees. But today, it's pulled back closer around 100 points. What's doing well? Well, one stock that's standing out is Azad Engineers. They won a big order. We'll get the management in just a bit. That stock, in fact, is running away. It's up more than 10% in today's trading session. And Gillette continues to do well. We had pointed out the stock actually a couple of weeks ago on Bazaar itself that it had done nothing from the end of 2019 onwards. Then it was finding its own. Numbers were quite good. That stock, in fact, is up close to around 5% as we speak. So very few stocks actually gaining. There are only 500 stocks that are advancing, close to around 1,700 stocks that are declining. Prashant.
170 lower on the Nifty now. So 24,130 is where the market is trading at. So this is giving back that Mahurat session gains, but also some more after that. So, that's the picture up on your screen, about 0.7% lower is where you're starting. Lots of names, and I can sort of dive into it in just a bit from now. But, let me count what is easier to count, which is stuff which is higher. So you've got Lodha, which is up 6%. That is Macrotech. It's a big mover on large volumes. Max Healthcare, the hospital company, that is up about 3%. It's done very well. Last 5 days, it's come up from lows of about 880 to 1,040. There is CAMS, which is up about 3%. Another one of those names which has done very well was about 4,200 4 days back, at about 4,700 now. UTI AMC, again, 4 days back, stock was at about 1,170. Stocks at about almost 1,400. So these are all sort of UTI AMC, of course, is also the cheapest AMC name. The other one, of course, is Birla Asset Management Company. But, I mean, it's not moving. UTI is the one which is moving. Jyoti Structures, Reddington, Rainbow Hospitals has had a sharp move. Rainbow has moved from 1,300 to 1,600. What, 7 or 8 days flat. So those are some of the moves that we are seeing at this point. Almost 200 down now. 24,100 is where we stand at. Devina Mehra is our market master of the day, founder and chairperson, MD of First Global. She's with us. Devina, it's always a pleasure. Great to have you with us here. Season's greetings, and wishing you and everyone at your end a very happy Diwali and Happy New Year. Just a quick word, Devina, on US elections, and do you think that is the one, and how will it play out? A simple question for our viewers, what they'd want to know is, who's better? Is it Trump or is it Harris for Indian equities?
Good morning, Prashant, and I have Happy New Samvat to you as well as to the viewers and everybody in the CNBC team. It is very hard to say what would be better for Indian equities. For one thing, I mean, the whole impact on US equities itself is not that easy to foresee, and this is like a few steps removed as far as their political stance on for example, the Israel war. The Democrats have been just as of hardliner and supportive of Israel as Trump. So it's hard to see, though. I mean, whatever be the other reservations on Trump, I must say the last time he was president, he was actually fairly good for the business and the economy. I mean, he did do a lot of good things. However, distasteful many of his other things are.
Okay, well, I think we'll have the answers. We just have to, it's the cliffhanger. The wait is another 2 days, and then we'll finally know, and then markets can decide what's good or not and make their peace with it. But Devina, the bigger issue is this fall here in India, and it's relentless. Even this morning, when we typically don't discuss markets here and now with our guests at this hour, but it's just an illustration. It's a 200-point fall suddenly with no fresh negative triggers. Now, we all thought it's China first, but the Chinese market is down. Hong Kong is down 10% in the last 1 month. Mainland China is down 6-7%. So this whole exodus of FPI money, I mean, what have you made of it? It's clearly not over. And the market's now coming down to very critical levels. Technical analysts are saying maybe a test of the 200 DMA will happen. What have you made of the October correction in India, which is now moving into November?
Okay, two things. First, of course, I'll sound like a broken record that there is really no correlation between the FPI buying or selling and the market movements over, even when the domestic mutual fund industry was not so big, or even when the retail participation was not so large. So looking at what's happening in China and therefore what is happening in FPI and therefore what will happen to India is totally the wrong lens to look at it. As far as the correction is concerned, this is something that I'd been anticipating for a while. So if you go back to my earlier interviews, I have been saying that, the correction is very much on the cards. It will happen. Only I have been a little nuanced at like two tiers, which is the large cap mainstream stocks and indices. While there will be a correction, I have not been worried that it would be a very sustained crash. And the reason for that is, of course, that 2010 to 20, the returns were very much below the trend line. So you got basically fixed deposit returns for that whole decade. And that created the room for the bull run. We are still not much above the trend line. In fact, we are not even at the trend line. So given that the risk of a sustained crash is limited there, but there have been enough areas in the market which have been very frothy, which again I have been talking about in my previous interviews also. And that's where you need to be careful, whether it was this IPO frenzy or, there have been phases of this PSU, defense, and all kinds of shady small and micro caps. I mean, there are, of course, good companies there as well. But once this kind of froth comes, then the good, bad, and the ugly, everything goes up. And as the past history shows, many of those stocks never make a comeback. So, that's something you must remember. So to recap, we are not that worried on the larger mainstream indices, while there might be interim pain. But there are enough areas where things will never come back.
By the way, I just want to mention here that the levels that we are quoting at right now, we're very quickly coming to the lows. I mean, that lower end of this range that we were talking about, Prashant highlighted that. I was also mentioning that. We're getting very close to testing those levels now, Nigel.
Indeed. We're moving towards recent lows. Actually, the 24,000 mark, that's the round number. That's the number that you do want to break today. So for the time being, though, that it appears the gates opened out, and in fact, the selling just started, particularly in the broader markets. Now we have only around 450 stocks that are, advancing. Well, Devina, good morning, and good to see you win as always. Trump will be good, I guess, for the US economy. From an India perspective, who's better?
That's, as I said, speculative. And often, in many of these news-driven things, even the first reaction of the market is not what it eventually is. I have been reading this book called Business Adventures, which talks about incidents which happened in 1960s and 1930s. And so often it happens that, market goes one way every day. The media finds reasons why it happened, and then the next day it goes another way. And then there are enough reasons on that side also. I think this is, and as I said, in any case, the FPI flows do not determine Indian market direction. But we were talking about how much the market is down. I was looking at, you were talking about how much the market is down, and I was looking at past 16, 20 years data, and all of that shows that almost every year.
I think
Devina's network, we lost you there, Devina, if you can hear us, but stay with us. We're just going to try and reconnect that connection in just a bit, and we'll come back to you. 500 stocks are higher, and you've got about 1,900 stocks which are lower. That's a steep one-way kind of a decline that you have on your hands at this point. PVR Inox is down 3%. That's at about 1530. It's down sharply. You've got PG Electroplast, which is down 3%, just sort of highlighting some single stocks. Supreme Industries is down 3.5%, all on decent-sized volumes for this point in the day. Kirloskar Brothers is down 3%. Look at Star Health. I think Star is down 5%. It had reported numbers on Thursday, was it, or Friday after market hours last week. Stock had seen a correction, but that's a pronounced one coming in this morning as well. I think PCBL, Polymed, some of these names we've highlighted. Vari Energy, big mover on Thursday and then on Friday as well. And that is coming off about 4.5%, 5%. I think Devina's back with us. Devina, please, you were saying you were comparing this correction to the previous ones. Go on.
Yeah, so I was looking at the 16-20-year data, and it was nearly every year you have a double-digit correction. I think there are only a couple of years that are exceptions to that. So it is not so, while you are going through it, it appears very, very massive, but it's not really so. We all know in theory that equity returns are volatile, but when you are living through it, it always seems like the end of the world. But it isn't. If you look at just the move that the market has made in this financial year itself, you are, and we know because we were hedged going into the financial year, we were hedged going into the election results. But now, while we hold some of those hedges still, they are so far away from today's prices that they're not very relevant anymore. So, just don't lose perspective. But of course, there's been this list of stocks that's been circulating on social media even last week, showing how many stocks are down 30, 40, 50% and even more. And that always happens. That the frothy areas of the market, as I said, many stocks never make a comeback. So more than half the stocks that have ever been listed in the Indian market, you can say, have gone to zero. So don't forget that.
No, I think the market's a great teacher. It always tends to remind when you're, in that exuberance mode. And I think we're in that period now. By the way, I just want to point out that the cut on Bajaj Auto is now 4.5%. It has become one of the weakest stocks in the Nifty, but it's not alone. Even Hero Moto, which relatively speaking, if you just go by the numbers, Hero's delivered better sales growth in October than Bajaj, but even Hero's turned. It started positive, and look at the selling come through very, very quickly on that stock. And then the crunching issue for the market really is Reliance. Reliance is down to 2.5%. I think we'll have Mr. Rakesh Sharma join us in the next couple of minutes. Before we... Oh, I think he is ready. Okay, Mr. Sharma, good morning. We will let Devina go on that note. Devina, thank you so much for being with us. Great to have your perspective, and we look forward to talking again soon. But it's a market that's falling rapidly. We have a lot of stocks to address as well, so we'll quickly move on now. Mr. Sharma is with us. Sir, first of all, Diwali greetings to you, your team, and all at home. And we wish you a wonderful new Samvat as well. Having said that, now I come to the performance. And I remember that, this was something that you had indicated in our earlier conversations as well. But the market is wondering why so much pressure on domestic sales while exports are picking up. What really happened in October?
Well, good morning and happy Diwali to all of you. Actually, it has been a smashing festive. Though it started a little bit tentatively before the Dussehra, but by the time festive actually closed, it's been, I think, the best ever festive after COVID. At least I can say that from our point of view, that our retails have been the highest ever in this period. And the right frame of reference actually is to compare like for like. It is to compare the festive of this year, which is about 30 days. There's a little bit of a tail of festive still going on in the north. But the 3rd October to 31st October, with a similar period last year, which is 15th October to 10th or 12th November, something like that, because that is the right frame. And if we compare from that frame, then our sales have been, overall sales has been double digit. Our area of focus, which is the top half of the industry, which is the 125cc plus segment, has grown upwards of 20%. We have sold over 200,000 Pulsars, which is like way, way above the last high which we had achieved. And even three-wheelers has had a smashing month with about 56,000 units of retail. And I think the previous festive was 45 or 46,000. So a very big difference. The EV business has soared. We've had tremendous sales in the two-wheeler side, touching almost 36,000. A lot of places, units, a lot of places are facing stock outs right now. There's a little bit of stock imbalance. The EV three-wheelers is over 7,000 units, which was, doing about 4,500-5,000. So when we look at retails, actually, it's rather good news. But if you look at just October to October, it doesn't suggest that, because people are, and particularly if you look at the wholesale sales to the dealers, because October, whenever the festive falls within the month, October then becomes, at least for us, a destocking month, and so will November be. So we look to decode the performance and how we are faring. We look at like-to-like comparison on a retail basis.
Okay, all right. Hi, Mr. Sharma. Good morning and good to see you. Ben, we've taken that clarification on board. So you're telling us that the numbers, the domestic numbers in particular, let's take that piece out of the way. The two-wheeler and three-wheelers, because of the difference in the retail and wholesalers. Otherwise, you're saying demand is strong. You have hit various records. So that will reflect in November as well, right? You'll see some part of that good work that will reflect in November. It's not as bad as it's looking at in an absolute number. Is that correct?
No, at a retail level, it is a very, very strong performance. In fact, as we were entering exiting quarter two, even as an industry where we had thought that industry would sort of clock 8% in this financial year, 6 to 8% is what we had said, it was trailing at about 5%. But now with this super performance in festive, and of course, there would be some bit of advancement of sales from November, December, because nowadays the festive has become, the peaks have become sharper. So, but I think this has bolstered the industry performance, and I think the outlook then becomes positive at, this back to the levels which we were anticipating, about 8%. And in that, the construct is that the top half is outpacing rest of the industry by at least 30 to 50%, So, so it's actually good news that what it is indicating is that people had held back their purchases as they were entering the festive zone in September and then in October. And it all came through in the last 10, 12 days of October. So it suggests that the industry is in good shape.
Sir, we're hearing you and trying to really understand. So I think one point is very clear. You're saying that the retail numbers have been very good. Wholesale has a destocking issue because that, the channel needs to be cleared up. on retail per se, just so that we have the numbers, could you give us the retail growth for the month of October?
Again, I won't look at the month of October, because if I give you the retail numbers for October, they are in the 30% range, because it's an unfair comparison. Because in this October, both the festives, Dussehra and Diwali, occurred in October, whereas last year, only Dussehra was there. So the right frame of reference is to look at the festive of this year, which is 2nd October to 31st, and 15th to 12th November, which is then covers both Dussehra and Diwali. If I take that frame of reference, then the area of our focus has grown upwards of 20% in retail terms, which is the 125cc plus segment. EV two-wheelers is a triple-digit growth. It's almost doubled, more than doubled. Retails have more than doubled over the last festive. And three-wheelers has also, grown at about 13-14%.
So that's helpful, sir. Again, the other number that we'll kind of hold on to is you're saying that 125cc and above, which has obviously been Bajaj's stated, target market, that is where you have grown 20% in retail terms, if we sort of look at the like-to-like festive season. So that's another clue we hold on to. But now let me ask you about the 125cc and below, which I know is not your core target, but I think that's also a segment where you were looking at a lot of potential disruption with launches like the Freedom 125, right? So just take us through what's happening in the 125cc area as well, and what your projections would be in that side of the market, the entry-level segment. What should we expect in the months to come?
So I think, Surbhi, you're referring to the 125cc, the below 125cc, that is 110cc, that is what it is there. There also we have grown, but we've grown in single digit. Our strategy has been through product and innovation to upgrade the 110cc buyer, particularly the one who is, at the upper end of the 110cc. And that we have been relentlessly pursuing through various product interventions. And the biggest disruption was the Bajaj Freedom, which is 125cc. But it is really targeted not just at the 125cc, but at also the 110cc. It is targeted at all those customers. They may be residing in the scooter segment or in the 100cc segment or the 125cc segment, who are rather more sensitive to fuel economy. And because, Bajaj Freedom halves the cost of operations. And it has had a great month. We have retailed about 17,000 units. We have dispatched about 30,000 units. And we are in a sort of a stock out situation. in many cities, for example, Mumbai and Delhi, where the penetration of the CNG network is quite good, we are already finding that within the first month or so, because really September was the first month where we had stocks in the pipeline, and we are already finding that it is commanding a share of up to 9 to 12% in the 125cc segment. So we are very hopeful that this will continue as we continue to sort of get into more and more territories which have got CNG network.
All right, Mr. Sharma, very quickly, on the EV two-wheeler part, you had indicated the way you'll have grown your market share, which is good. It's 22% odd. Could you tell us what is your current updated number? Because it appears y'all and TVS are going pretty much neck to neck, though y'all have gained market share big time, in the last 9-10 months or so.
That's right. When we opened the year, it was about 11.5%. We are at about 20% plus. And we've had and that is basis Vahan. But as you can imagine, the crush of retails has been so high that everything is not getting reflected in Vahan. But that is the case, I'm sure, for everyone. We have a very strong momentum in our retails. And we are making, in another 2 weeks or 3 weeks, we would be introducing a best-in-class product, which would be taking aim at a segment where we are lagging in share. And when we will, hopefully, with that and with subsequent introductions, which will unfold over December and January, we will have a very, very potent portfolio. And I think we should continue this trajectory of sales performance and keep improving our position.
All right, so you're in second place right now. You're holding on to that.
No, if I just look at Vahan, I would say it's a very close third, because I think it's
close
just
third,
about
with TVS.
1,500 units, which is separating the number 2 and number 3.
All right, the domestic numbers are still looking a little bit muddled, though you're sounding very, very confident and optimistic. So we'll take that, in the month ahead as well. But exports is definitely looking good. And that's the bright spot in these numbers. Exports are getting better. What about Nigeria? Earlier it was 15,000-20,000, then it moved from 20,000-25,000 odd. For the last month, what was the number from coming out of Nigeria?
Yeah, like we've been saying, that exports is on a steady improvement path. Nigeria last month jumped up to about 33,000 retails, which is, you rightly recall that it was 25,000 in September. So that's very good. It's a very good sign. But Latin America has done extremely well with the 20% growth. We've also recorded, in the last 12 to 18 months period, I would say, the highest retail numbers in places like Bangladesh, Philippines, and a host of other countries. So all these things will continue to drive the exports business smartly on the recovery path. But, one point which I would like to make on exports is if you take the year-to-date growth, it's 9% in volume terms, but it's actually 15% in revenue terms. And that captures the fact that the mix led by, markets in Latin America and parts of Europe and Asia have started to really do much better. So really, when we look at the revenue growth and obviously the EBITDA growth, then it's much, much higher than the volume growth.
Okay, all right, Mr. Sharma, we leave it there. So good luck. Thank you very much for sort of putting all of those numbers, both local and exports, in perspective for us. We wish you all the best of luck. Thank you. We'll take a quick commercial break here. We're going to come back. 250 points lower on the Nifty, by the way. We'll have the management of Azad Engineering join us to talk about the 700 crore contract with Mitsubishi Heavy Industries. Stay tuned. That's coming up.
Welcome back. The Nifty is under pressure and the broader markets as well are seeing selling. But I'll tell you what, one stock that's bucking the trend is Azad Engineering. It's surging in today's trading session. The company has signed a long-term contract worth around 700 crore rupees with Mitsubishi Heavy Industries to supply highly engineered and complex rotating and stationary airfoils for advanced gas and thermal power turbine engines. We have with us Mr. Vishnu Malpani, the whole-time director at Azad Engineering, who joins us on the show. Hi, Vishnu. Good morning and congratulations. This order seems to be a big one and the street has definitely taken note of it. Give us a few details on this. What's the quarterly, what's the monthly execution, if you could tell us? How would revenue recognition be of this particular order, the execution timeline and margins you'll enjoy on this? So timelines as well as margins. Please go ahead.
Sure. So good morning. First of all, thanks for having me on the show. I think our journey with Mitsubishi started back in the year 2012. And, Azad, since being in the manufacturing of highly engineered and critical parts for mission and life critical components, the entry barriers in this industry to work with a Japanese client like Mitsubishi took us several years. We started with the qualification of one part and, slowly engine by engine, part by part, we've come to a point today where, the Japanese customer today trusts us with their, with their contracts, with their part. So today we've reached that point in our journey with them where we should probably be able to scale up our business very, very quickly. And if you remember, I don't know if the street took a note of it or you took a note of it, in 2012 is when we started. 2022, Mitsubishi laid a foundation stone for a dedicated plant for them. So this is an attempt for, from them to increase our wallet share with them. So we are a growth supplier with them. Today we hold about 1%. We are slowly going to increase it to 1 to 2 to 5% slowly. And this contract is a testament to them blocking our capacity and then blocking our capacity for the future, in the coming years. So this is going to really help. And the execution period of this is going to be, in about 2 quarters, 1 or 2 quarters, we should have the plant up. And 3 to 4 quarters onwards, we should start generating the revenue out of it.
And so margins?
That's where. So the margins are going to be pretty consistent with our existing, so we are going to have, similar margins, blended margins as a company. So I think that is not going to change. So any order that we take in our business, generally is at a blended margin of 32 to 35% at a company level. So we ensure that is always done. So the margin remains. Yeah.
Got it. Vishnu, hi, good morning and congratulations. I think all of you must be thrilled, right? I mean, as you said, to get to a point where you're able to work with a client like Mitsubishi. So absolutely great news. Just a quick word. This is a long-term contract, which means this becomes a kind of a recurring business for you. And what should we expect?
So this is this is a recurring business, obviously, for us. We are qualifying parts, and today we finished qualification of most of their part numbers, right? And for some of the parts that we are manufacturing for them, I think we are the only supplier outside of Japan. So this is in conjunction to that. So this is going to be a recurring revenue. This is a 5-year contract of 700 crores that we've done. And, so these contracts generally get renewed after a longer period of time, etc., when it comes to the closure. So in terms of, for Mitsubishi today, you should look at it as, Azad is probably the best cost supplier and also in terms of quality. So we are providing those solutions to them. And that is why this contract is more like, tying down our capacity for the next 5 years to be dedicated to them for a single plant. So that.
And after 5 years, you, basically post the execution of this, you kind of look at another one. And there are price escalation clauses, etc. in this, or this is a fixed price?
So these are standard, long-term contracts that happen in the industry. So, so this is a long-term contract and pricing agreement. So this details, the pricing that is going to be there for the next 5 years. So it's nice.
Vishnu, you said that I think right now, in terms of Mitsubishi's supplier base, you are at 1% and you want to go up to 5%, right?
So the aspiration is to grow our wallet share. I think, if you recall any of our previous discussions, we've constantly been talking about how we are targeting an addressable market of $28 to $30 billion. And today, wherever Azad is, we are at about 1.5%, 2%. So our endeavor is to grow our wallet share with each of our customers. And, any player that we compete with globally today has been around for 50, 60 years or probably more. Azad's been there for about 14, 15 years. So I think it's our constant endeavor to increase our wallet share, and I think this is an opportunity or a testament to what we've been saying. So
no, absolutely. And the markets are taking note of it. The markets are extremely happy with the kind of association that you're making with these global majors. Also, you're getting orders from Honeywell. So just now, give us a breakdown of the order book. How much is now Mitsubishi? How much is Honeywell? And with these kind of big orders coming your way, especially in the last couple of weeks, what is the order book growth that you envisage for this year and next year?
So I think so our order book has grown significantly since our IPO. If you remember, around the IPO, we were at about 2,000 odd crores. And if you net off the Honeywell and the contract with Mitsubishi, we were at about 3,200 crores roughly. So, this would add another 1,200, 1,300 crores in addition to what we have. So we are looking at about an order book of upwards of 4,000 crores as we speak right now.
And this would be executed over how long? 4,000 crores covers you for how many quarters or years?
These are different contracts put together. Some of them are for 3 years, 5 years, 7 years, and 10 years. So these are, long-term contracts from that perspective. Yeah.
Okay.
So you're right now at 4,000 crores, and just give us some projections in terms of the pipeline ahead. What is the order book growth this year? And as you're looking at a scale up with a lot of these, MNC giants, what would the order book projection be, say, for even next year?
So I will not be able to comment on a lot of numbers, but I can tell you that we have contracts that are being discussed with customers at an advanced level, and I think you will see a similar growth in our order book that you would have seen so far in the market. So we have the next few months where in a week or so we should be coming up with our results, and we should talk about it in greater detail at that point, I think.
Well, we'll push you for more. Yeah, we'll push you for more numbers at that point of time. But I just want to understand, because I'm looking at your quarterly run rate, you're still going at around 100 crores per quarter. And this order of 700 crores, as you said, you'll start executing it in the next 3 to 4 quarters. So your quarterly run rate will have to go up, right? Do you think this entire 700 crores gets executed over FY26 and FY27? Just want to understand that. I missed that part.
No, so it will be executed over 5 years. So
over 5 years.
So we're building an independent plant for them. We should take about 2 quarters, and then we should ramp our business up with them over 3-4 quarters. So we should start supplying to the new plant. But talking about our quarterly run rate, see, about 4 years ago we were doing about 100 crores per annum, right? So from there, 100 crores a quarter is a big sort of jump in terms of us utilizing building capacity and then utilizing it. I think similar trend is going to be continuing because we're constantly, like you see, our order book is constantly getting added. So we are also building capacity with the new plant coming in. So I think it should all...
Got it, Vishnu. I understood that point. Over the next 5 years, you'll be executing this entire contract. Very quickly, we don't want a fixed number for the coming fiscal, but I'm going through an ICICI Securities note, and they are very, very bullish on the company. They are targeting the number. They're saying they're at around 1% of the targeted market. They're expecting you to go to 7 and then to around 10%. But they believe that you will grow by around 25 to 30% consistently over the next 10 years or so, all the way till FY23. Would you believe at current juncture that's on course?
Yeah, at this point, I think we're in the process of finalizing numbers, and in a board meeting, etc. So I would not be able to comment on the short term or the long term guidance, but I think give me a week or so and we should be able to talk about this again.
Okay, well, we'll leave it there. Thank you very much for joining us, Vishnu. Appreciate you taking out the time and being here on CNBC TV 18. Thanks indeed. Good luck. Narayana Health is the next management on the program. The hospital recorded an in-line set of second quarter numbers. Revenues came in healthy, but EBITDA margins contracted. International business revenue fell at 19%, largely due to a slowdown in patient volumes from Bangladesh. We have Sandhya J, Group Chief Financial Officer at Narayana Health, now joining us. Sandhya, good morning. Great to have you with us here on the program. Thanks very much for joining us as always. I want to start with exactly that, the international business, international patient volume. Could you talk to us about that 19% drop that you saw? What is the situation in third quarter so far? What is it as a percentage of your overall numbers?
Sure. So first, let us start with the numbers. Our international business last year, same quarter, was about 8%, above 8%, 8.7% actually. That has dropped to 6.6% this year. So we've seen that kind of dip, and that's why you're seeing that 19% year-on-year drop. We haven't seen any significant improvement in terms of the international numbers. One, because there is a visa restraint that people are not able to travel. And second also is that in quarter three, even otherwise travels are not as robust as they are in other quarters. So we are anticipating that we will continue to see decline in the international business. Having said that, we've always guided that our endeavor is to be able to show growth in the domestic business. And that's where our focus has been. So to that extent, we are very happy that we've been able to report a 13.5% growth in the domestic business, which has been able to offset the impact of the losses that we've taken on the international business.
So what could be the domestic business growth, Sandhya, for the full year then?
We aren't guiding that number, but we can definitely expect in line with the performance that we have delivered so far. And improving from here.
This international patient volume drop-off happened in Q2, right? I mean, started in Q2, essentially.
It had started in Q1, but because there were already patients who had come into India, so there we were finishing off the procedures, but further travel had got reduced significantly. So therefore, the full impact we were seeing in Q2, and it is only, I don't think it's going to get better from here. At least in the short term.
Okay, all right. So we'll have to take that on board, that the international patient contribution will perhaps remain under pressure. But let's talk about the domestic business, Sandhya. Give us some color on how occupancies have been and how, whichever metric you look at, average revenue per occupied bed, or I think you look more at revenue per patient, right? I remember that conversation always. So give us some color into how revenue per patient has improved this time.
Sure. So just a little step back to the context of the domestic business. There are like two sides to that performance. One is our flagships were under some pressure in this quarter. One, of course, because of Bangladesh, we already spoke about, but also because Kolkata is a very important portion of our mix, and there was a lot of political tension in Kolkata. And therefore, that part of the business was under some amount of stress. So that's one side of the picture. The other side of the picture is the other units, which is the non-flagship units. All of them fortunately performed quite well. In fact, many of them hit their highest ever revenues. In fact, we ourselves as a group have hit our highest ever revenue this quarter. We've crossed 1,400 crores as a milestone. So it's like a little bit of impact from international and from the political situation in Kolkata, but also a lot of improvement in terms of the performance of the rest of the group. So that's just a broad context. In terms of our average revenue per patient, the IP ARPP, it moved to 1,35,000. It was 1,29,000 last quarter, and 1,18,000 the same quarter last year. So that's a healthy 14% YOY and close to 4% quarter-on-quarter growth. In terms of footfall, our total footfall was about 7.7 lakh patients this quarter. Again, that was almost a 9% growth quarter-on-quarter. So again, a good growth in footfall. Having said that, this number is moderated because of the impact on the flagships.
Just rechecking the number, your average revenue per patient stood at 1,35,000 in this quarter versus 1,29,000. That's in Q1? Or yes, was it the previous year? In Q1. Okay, so from Q1 it's improved. Okay, okay, that gives us some sense. So Kolkata and Bangladesh lending some pressure to the business.
Indeed. Sandhya, what about your occupancy? I missed that number. Was it at 60, 65% is what we were talking about the last time around? It's in that vicinity?
Yes, we are in that same range, though our non-flagships have seen greater than 70% occupancy. So that's been a very healthy occupancy across all our non-flagships. Flagships have had a little lower occupancy.
Okay, all right. Let's focus on Cayman then. You know, your operations out there saw a decline of close to around 7%. You have commissioned a new unit as well, which in the near term could be a margin dilutive. So could you tell us how do you see that business shaping up from here on, and by when can we return back to normalcy in terms of margins profitability?
Sure. So we did see some scale down in terms of acute high care procedures because we were getting ready for the new hospital. So some of the doctors took early leave to ensure availability when the hospital goes live, etc. And also because the revenue base of Cayman is very small, so small variations bring that fluctuation. There was one more event was like that there was a shutdown for about 7 to 10 days in August because of hurricane. So we almost lost 10 days of revenue during that period. Cayman is a hurricane-prone geography. And then during that period, transportation, etc. gets severely impacted. So this resulted in a dip in revenue. But the costs were all fully loaded up because the hospital is ready for commissioning and we're going through the approval process. We've got one set of approvals as of last week, and we have to get another set of approvals, which will happen over the next few weeks. So therefore, we are also seeing the full effect of the dilution, which is coming because all the medical hiring is done and all the overhead costs are being incurred, but there is no top line coming in from the facility. So that also is impacting margins. We've always guided that we need at least 4 to 6 quarters to be able to bring back the full scale in terms of margin. Just I want to give a little color saying the underlying margin of the India business has actually grown. The overall dilution has come mainly because of Cayman and because of the investments we are making in integrated care. So that dilution impact which is coming on from Cayman will slowly taper down over the next 4 to 6 quarters.
Right. So in the near term, we should work with a margin band of around this 23 to 25%. Would it be fair?
I do not want to guide, but it sounds fair.
Okay. All right. You have lined up a big capex, as you've mentioned in the past as well, of more than 1,000 crores. But the street would be interested to know about the return ratios, ROE, ROCE. Is there any target band you're looking at? I was reading a couple of notes which suggested that you'll be in that vicinity of around 22 to 24%. Would that be, an aspiration?
Definitely. The only point is that a lot of our capex investments are happening in greenfield assets. So, which means that during the build-out phase, which is the next 3 years, there would be the capex coming on the books, but we will not have commensurate revenue. So, all these assets have to start delivering return to be able to hit the target ROCE band. So, there will be a period in the interim where ROCE will dilute. So as you would have already seen from Q1 or Q2 of last year to Q2 of this year, you've seen a ROCE dilution because of the investments we've made in land and the Cayman capex going fully live, etc. So that dilution we will see in the short term. But once all the assets go online and the returns start coming in, we will go back to our target ROCE.
And that is 22 to 24%?
Upwards of 20%, yes.
Okay. All right. Sandhya, we'll leave it there. Thank you very much for joining us. Appreciate you being here on the program. Good luck and speak to you again soon. By the way, at the bottom of the screen, the second big IPO to list at a discount. The first one was Hyundai, which listed at a discount. Afcons becomes the second large one, which has made it to the market below the issue price, which was 463. So it's listed at 426, now at about 447, which is about 3.5% lower at this point. Look at the volumes, tremendous, huge. That's a Shapoorji Group company, and it's a new listing in the market. I mean, the market, of course, has been under pressure with about a 1%, a little over a 1% fall on the Nifty at this stage. We are trading below the 24,073 level, which is the 25th of October low. So the next kind of, you could look at all sorts of levels, but the next number which we put out was 23,893, which is essentially the low that we saw on the 5th of August. That was a swing low from where the market sort of, saw a one-way kind of a move all the way to a new all-time high in September this year. So 23,893 is the next sort of support on the downside as we look at levels from here on. Mitesh is with us with what he'd want you to do with this kind of a market. Mitesh, good morning again. Thanks for joining in. Almost a 300-point fall now. What would you recommend?
So, Prashant, I think below 24,170, we have added onto our put spreads on the Nifty. My belief is that the next level is 24,000 being a round number, and the open interest on the option side. That's the first target, and we've kind of just touched that. And the other one is 23,570, 600 zone. There's a weekly average, there's a weekly there's a gap on the daily charts over there as well. So I think there's a good chance that we might actually, head towards 23,600 or levels just below that. And unless until we start capturing 24,250 again, I think the view would be to sell on rallies. Having said that, on the stock side, I have a sell on GNFC. Keep a stop at about 615 here. Look for a target of around 575 to about 570 on the downside. And the other one is a sell on Hindalco with the stop at about 685 and a target of 650 on the downside.
What a morning it's turning out to be. 300 points gone, 24,000 bulls finding it very, very tough to defend that. Mitesh, thank you very much. This is a tough-looking screen. Prashant, it's almost as if whoever's the new US president is going to sanction India or, I don't know, put 200% tariffs on us. The way I think this kind of a sell-off, the ferocity of the fall, I think probably it took a lot of people by surprise this Monday morning.
I think so too, Surabhi. At least I don't think anyone expected. But, we'll see. You've got a full day in front of you. And it's still 1.25% kind of a fall. Yeah. I mean, it looks, of course, in point terms. But, it's an index which is at 24,000. Just breaking 24,000 now. So we'll have to keep an eye. I mean, the broader market is looking, actually, it's looking even worse because almost, 5:1 in favor of declines is the number out there. So very few things up in the green. The vast majority is down and out. There you go. That's essentially the 5:1 declines to advances ratio that we are looking at. So some nervousness ahead of US elections, all of that, of course. But I think it's a reversal of the Muhurat day gain, which was worth about 100 points, and then some as we move into the second hour of the trading this Monday morning. I think we'll take a quick commercial break here. Commodities in focus. Manisha is going to be here with just that. Stay tuned.
Okay, well, it's a crunching fall for equities here in India. Let's figure out what's happening elsewhere in the world, especially in the world of commodities. We've got Manisha joining us. Manisha, what's top of mind for you right now?
Well, Asia, for one, has started on a positive note across commodities, and that is because the dollar index has declined below 104. So that clearly has been supportive. So whether it's about precious metals, industrial metals, and for crude oil prices, we are starting Asia with stronger gains here, especially for crude oil prices, where it has been a remarkable increase here. We are trading above $74 a barrel for the Brent prices. And this is after statements coming in over the weekend that OPEC and allies will delay their planned output hike of 180,000 barrels per day by 1 month. It has been delayed earlier once as well. This was done by 3 months, and now with 1 month more put forward, that means that the output cut only will begin by 1st of January 2025. Well, we have seen crude prices under pressure because of weak demand, especially from China, and then there has been higher production continuing from non-OPEC as well. OPEC has slashed nearly 6 million barrels per day in the last 2 years, and that means that this is the kind of spare capacity that OPEC has. So even if it does not increase output, that tells you that there is enough spare capacity in the world and there is oversupply. And then when you look at the US markets as well, we are looking at record high productions there. And the US presidential election candidates, both of them, by the way, have promised to increase oil production going forward. So this is one commodity which is really not bothered on who comes in as the new US president. Whoever comes has promised higher oil production. opening up of shale gas. So that tells you that more production is what we could be looking at going forward from non-OPEC as well. And then you have plenty of events happening in this week. The US presidential elections is going to be one part of it. You have the US Fed rate meeting on 6th and 7th. That decision would come in on 7th of November. And then the US PMI trade data, that comes in between Wednesday and Thursday as well. More importantly, it's not just about the US Fed meeting. You also have monetary policy meetings coming in from UK, Australia, Brazil, Poland, Norway, and a couple of more countries there. And then more importantly, China could be spending or giving out $10 trillion worth of stimulus. That would mean more demand coming in from China, which also is positive. Many of the industrial commodities and the crude oil prices seem to be taking strength from that as well.
Okay, all right, Manisha, thank you very much for that. So let's see what are the cues that we're going to get from those two major power centers, the US on one side and China on the other. It's a big week, and I think nerves are really showing up ahead of that. Well, with that, I think we have a couple of stocks to look at before we hand it over to Lata. Vinny is joining in. Sun Pharma's obviously had a rough morning along with the rest of the market, but Sun Pharma has fundamental news surrounding it as well. Vinny, fill us in.
Absolutely. The fundamental news is because the US court, the district court in New Jersey, has granted a preliminary injunction for Inside Corporation against Sun Pharma. This was specially for the drug, which is Leqselvi. Now, this drug was expected to give Sun Pharma a revenue in the next 2-3 years that we would look at would be somewhere around between $200 million to $300 million. Now, obviously, that is something that has been delayed now, and that is why we are seeing Sun Pharma see a bit of a fall in its stock price today, 3-4% downtick that we're seeing. In July 2024, they had received this approval, but since then there have been problems. So now everyone was watching out for this clearance coming in, and this delay is something that is impacting the stock price today. Now, Nomura also is saying that, they could expect some bit of an earnings impact coming in because of this drug in FY25 around a 0.4% impact, FY26 a 3%, and in FY27 a 5% impact on terms of the earnings of the company. So keep an eye out on that, some bit of an impact going forward as well.
Okay, all right, Vinny, thanks for that. Well, the bears are catching serious momentum on the way down. What was a 300-point fall till about 3-4 minutes back is now a 350-point fall. So, yeah, this is, unusually heavy selling for so early on as you start a big, big week where cues are coming in. Maybe, Prashant, it's just, I think, just people taking positions and perhaps being on the sidelines if they already weren't ahead of these big events?
I think so. I mean, some amount of liquidation, right? Yeah. I mean, I don't think anybody would take a one-way bet, right? I mean, taking a short position or something of that sort. Maybe just some sort of profit booking. Because we did get a bit of a rebound. I mean, very, very short-lived rebound after the sharp selling that we saw. And many of those, I mean, if you look at stock specific, these are all names which had rallied quite hard over the last 2-3 days. I mean, take a look at the recent listing like Vari, etc. But of course, it's not limited to a few, but some of the big volume-led gainers across the broader market are all names which rallied in the last 3-4 odd trading sessions. So, some of that, of course, getting unbound as we head into the next 3 or 4 days. And actually this week we'll have a new US president by Wednesday morning. You'll have the China stimulus somewhere in the next 3-4 days. And of course, a 25 basis point cut from the Fed on Thursday as well. So it's a big one. And I think a little bit of a softer kind of screen, a bit in the red as we go into all of those things. Well, we'll take a quick commercial break here. We're going to come back. Lata will be in conversation with Mithul Kotecha of Barclays, Neeraj Gambhir of Axis, and they talk about what else, but the implications of a Trump or a Harris victory on rates, currencies, emerging markets. Stay tuned. That's coming up in just a bit.